is a good interview for me to listen to because it's like, you're right. The real estate in between your ears is the key to all of this. And that's what I think is the real clarity for everybody. It's really right here.
I'm a real estate investor. I'm looking to bring capital to Houston and start investing in Houston. So what are the things that our goal is to help people get? It's a 6-month process, and the goal in the 6-month program, it starts with a 10-week intensive and then support throughout that 6 months to get you a property inside of 6 months.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello, everybody, and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein, and today we have a very special guest. It's not me talking today. I think I want to bring some investors that I've known for a while and just watching them and saying, whoa, what are they doing differently? And I need to get these guys on my show so they can provide some value to the listeners, because I think it's important for people to hear other people's stories and just like what clicked with them, where it took them from, owning a handful of properties to owning hundreds of doors, and how they're able to do that. And Mike's a perfect example of somebody who's just really, he's been in real estate for 20 years, but really over the last couple of years, he really focused on it. And when he focused on it, he just grew, and he's just growing rapidly, and he's looking at deals, and he's, he just took down a 100-unit property. So he is really moving fast. And I thought I needed to get him on the show just to talk about the basic principles of success. Let me introduce Mike Fritz to everyone that does not know him. Mike is the CEO and founding member of Titanium Capital Investments. He's also the CEO of Power Up Real Estate, which is a platform to help newer investors get off the ground to really power up their real estate game. Because really, when it comes down to it, there's basic principles, and then it's on you, the individual, to take massive action. And I think Mike does a really good job of, demonstrating what he's done, and you need to listen to what he's doing so you can replicate that. Don't go out and recreate the wheel, and just, go after it, basically. Titanium Capital is a multifamily investment company that partners with passive investors to provide higher than usual returns for its investors. Multifamily real estate is one of the most stable investments available. It not only provides an instant monthly cash flow on cash returns for its investors, but investors will also share in the upside of the property when sold. So anyways, Mike, welcome to the show, and thank you for your time today. And I can't wait to dig into this a little bit more.
Oh, it's so good to be here, brother. So good to be here. I love what you're doing, because one of the things people hit their head on, at least I did until I understood the game, is financing. So I'm loving what you're doing, educating the community of investors, because that's often one of the things that stops us, right? And so I love what you're doing here.
Awesome. Thank you. Yeah, it really comes down to, being able to raise money and figuring out how to finance it, right? Other than that, and then
Absolutely.
Obviously underwriting the file, what to look for, where to find these deals off market, how to build broker relationships, and then how to take massive action. So
Absolutely.
Why don't we rewind before you were in real estate, you did your first deal 20 years ago, or give or take. And then you got into kind of leadership coaching, right? You were a motivational speaker for students, for
college and high school students.
College and high school students. So just walk me through like your transition. And I think you still might do a little of that now, but barely, not as much. Walk us through like that point, and then what clicked with you? Like, I need to get into doing real estate as a business. And then from there, how'd you progress?
So I think, for me, 20 years ago when my wife and I got married, we just celebrated 20 years this year. We got married at age 20, got married young. And my first property, I was a builder. My family come from a family of builders. I had my mom and dad help me get a loan, and I built a duplex, and my wife and I lived in half and rented the other half house. So I didn't know what it was at that point, but so we kind of got started. My family owned a few. I think my parents owned 5 units, a couple duplexes, and one single family house. So I kind of grew up around rental property, but they were always in fact, my parents own property today, and they still self-manage their properties. And so they said that, and so I kind of grew up around the bootstrap mentality. And then my wife and I kind of started to buy a couple properties here and there. And then And then we kind of stopped because I didn't really know how to grow. Like, I'm like, man, unless I'm going to do this full time, I don't know how to grow this. Having 2-3 units adds an extra 1,000, 1,500, $2,000 a month to my revenue. That seems pretty good. Well, and then I kind of start to get the bug about 4 or 5 years ago. I'm like, man, real estate really is passive. Let's start ramping this up. And I didn't have a clue what I was doing, so I couldn't do it. I tried, and I'm like, I don't know what I'm doing. Well, for the last decade, I've been on the road full time, as Beau said, traveling and speaking to college and high school students around the topic of student engagement, leadership, and essentially helping them become the kind of leaders that employers want to hire, the colleges want to accept, entrepreneurs that can go out and launch companies. So I've had the privilege of doing that, but my life got severely interrupted by COVID. I was doing 100 gigs a year. I was, all over the country, and 39 states all over the country. And then when COVID hit, my business went away overnight. Right. And so March of 2020, so I entered 2020 with 13 units. And I exited with nearly 300. But when COVID hit, I had to make a hard shift. And I kind of am a pretty fast action taker by nature. Sometimes it gets me in trouble. I do things before I know what the heck I'm doing. But when COVID hit, so I kind of got into it in many ways full-time by necessity, not by passion. And now I love it more than I wish I would have done this 10 years ago. And all of my traveling and speaking, I wish would have been on real estate and empowering people to create passive revenue, which is what I do now because it's changed my wife and I's life. I mean, we moved out to Phoenix, got out of the cold weather, live out here in a beautiful place where, it's beautiful all year. And it gets warm in the summer, but I can still play golf all year long. So, but so for us, real estate kind of this last year became really, really what we did full time. Now, here's the big shift though, is I hired a mentor to teach me what the heck to do because I had no idea. So last March, when COVID took away my business, I hired a mentor. He's like, do this. And 71 days later, I got my first multifamily with raising private capital under contract from hiring that mentor. And then all year long, I raised about $6.5 million last year in private capital. And all of that because somebody kind of coached me because I had no idea what the heck I was doing. You know what I mean?
That's incredible. So when I really just heard you say that, how many units just in such a short amount of time, and essentially when these properties start going full cycle and all that stuff, it's gonna right there is like a huge transition for you, like where the reoccurring revenue from these units, it's just it's a huge shift. You don't necessarily need to go out and do any more speaking if you didn't want to, right? You could.
Nope.
You can scale up. I mean, if you do that again, the next 3 years, you're at 1,000 units, right? Or maybe you can do that in a year if you wanted to, right? You could get 1,000 doors. And so that I think that's very important because you said something earlier, and I want to unpack that a little bit. You said that you always move fast, and sometimes it's gotten you in trouble, right? Because, but what I heard you say is, listen, I'm going to learn something. I'm going to go do it. And I'm not going to be perfect at it. I'm going to be learning on the road, but generally I have the idea, I understand the concepts, but in real estate, nothing's perfect. Like you start closing deals and you'll find out
my goodness,
it gets stressful. You got to just keep going and you just got to stay composed. And I think people need to learn how to keep that mindset that, hey, at the end of the day, you gotta it is what it is, right? We gotta keep pushing forward, and just so how did you but that's still remarkable to grow your business that quickly. So it really, I think what you got really good at doing is telling your story, and then people said, listen, Mike, you're doing a great job. I want to be a part of what you're doing. I want to learn. I have some investment capital that's sitting on the sidelines. I'd rather put it to work where I'm going to get a better return. And you did a really good job of that, because a lot of the syndicators I work with and I learn from, that's the whole key of the game is really finding the deals with the value add component, especially when you're getting started to ramp up, because that's how you force depreciation, but building that list of investors. And so when you were getting started, it was probably a little bit more difficult. Now it's probably easier to raise money. How did you really get that process started?
Yeah, great question. So when I first started, this is the beautiful part of humble beginnings is those 13 units that I had some equity in. I did a refinance on one of those properties and I pulled out $50,000 and I had a $50,000 chunk of money. And for my first property, I went into that first property and I asked other investors to match my investment. Now I don't put any money into my deal because I don't have to. But when I first started, I had refinanced. Now, if you don't have that capital to put into your deal, you don't have to do it that way. That was my limiting belief that I had to put into invest into my own deal. And come to find out, investors don't need you to do that. They just need to know you know what you're doing. But when I first started, my first thought was, okay, I literally, and this is no lie, you talk about practical. I took my phone and I thumbed through every contact. If you go all the way to the bottom of your contacts, you can see how many contacts you have in your phone. And I had, I don't know, 1,000 or 1,100 or something. Not as many as a lot of other people. So I scanned all the way down and said, okay, I have 900 people. So I went to the top of my contacts and I scrolled down my phone and I wrote down every single person I thought that just might be interested in a conversation. Like that. That's literally what I did. And then I went to my Facebook friends list and I did the exact same thing. I scrolled down my friends list and just wrote down every single person I thought that might just be interested in a conversation, not investing in real estate. Because again, from you haven't talked to them in a year to giving you 100 grand is a big jump, right? Or 50 grand, that's a big jump. So you're not looking for money, you're looking for conversations. And that's what I had to learn is I'm not looking for capital, I'm looking for conversations that will eventually lead to capital. Because if you're looking for capital, most people are like, dude, I haven't talked to you since high school. What the heck are you calling me for? You know what I mean? And so you need conversations. And so for me, I thought, okay, I'm just going to scroll down the places that I have lists of people. In the old days, it would have been a Rolodex. Today it's our phones, right? And so I just scrolled down and I wrote down every name I know of. And then I just started. So when I had that property that came up, that it was a very first one I, quote unquote, raised money for, was a 6-unit property, 780,000. We ended up getting it for 720. I still own that property today. It's a beautiful, beautiful, beautiful property, but smaller deal. Not a very big deal for what we do now and for what most people, most of the syndicators I talk to are doing. But for me, it was where I started. I had to raise about 200,000 for that deal. And I just started. So I had 3 people that I'm like, these are my 3 ringers. I'm like, these 3 guys, they've got money. And not one of them ended up investing in that deal. And not one of them did. And so I had to start, I ended up calling more people that were on my list and eventually found 3 people. They gave 50,000 each, and I put in 50,000, and we were able to get that deal done. But here's the thing that happened when I got that first deal done. It's the law of the first deal, right? And so once you get that first deal done and people see you as an investor, and this is probably the thing that I teach the people that are in our academies and our coaching programs, the number one thing that you have to shift if you want to start raising capital at scale and even start raising capital is you have to rewrite the narrative of how people know you. Because unless you're a full-time real estate investor, they know you as a CPA, an engineer, a factory worker, a hairstylist, XYZ. That's how they know you. That's what they know you do. Well, if they're going to give you 50 grand, they have to think of you as an investor. And in order to do that, you have to rewrite the narrative of how people know you. And the best way to do that is to get a deal done and stop posting about what you're eating for dinner and start posting about real estate. And start posting about what's going on in the market, what you see, where you're headed, what's your next property you're buying. It's interesting now, all those people that used to book me to speak over the last 10 years, I'll bet you over the last 4 months, 6 to 8 of those college coordinators that booked me to speak have reached out via Facebook Messenger asking me real estate questions. That's what I want, right? It's people that used to know me as X, now they know me as Y. And so if you want to start raising capital, you have to rewrite the narrative of how people know you. And that happens by everywhere you are seen. You need to be seen next to a property or pursuing a property. And that's how I think you'll get people to start shifting their view of you and start saying, okay, well, let's talk to Mike or Sarah or whoever. So that's really what I did in the last year. And then once you find that button and you just keep pushing over and over and over again. So I wrote so every person that invested with me, for example, I asked them, do you know anybody else who might be interested in coming on board? Every single time somebody said yes, every single time somebody said no, I asked them if they knew somebody else. When I first started, I thought it was more, it was like this, like behemoth of a thing. And the little I realized it's literally about rewriting the narrative and lining up conversations. Watch the game change. And I'm not kidding you.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
And people listening, it's not, you don't need to just go out and do a huge syndication. This could just, like Mike did, you do some joint ventures in the beginning. You get your feet wet, you build momentum, you build some wins underneath. It could be a single family home that
Totally.
you do a joint venture. It doesn't necessarily need to be a 20-unit building. You need to just make a step in the right direction to just get the ball rolling. Once the ball's rolling, then everything becomes easier because you have social proof, right? Like you're
totally.
now, like Mike's saying, you're in front of properties, you're doing, a walkthrough video of like the new house you just closed on, which is going to be an Airbnb, or this new 5-unit property you just bought, right? And so from there, your momentum, and then once you got that momentum, it sounds like in a year's time, you really just put your foot down on the gas pedal and said, okay, let's go a little bit bigger, because the bigger the deal, the bigger the spread, the bigger the win for everybody. And so that's what you did. And you were able to do it just like super fast, where some people spend their whole life building a portfolio or 15 rental properties, right? Like they can probably live off the income, and that's great.
Sure.
But
Sure.
I think it's good for people to see what's achievable. Just like my friend we interviewed the other day, he went from zero reoccurring revenue to, in 7 months, $15,000 a month in reoccurring revenue in 7 months, right? Like, it's a game changer for people. And
Huge.
That's
$4,000 a month is a major game changer for most people. Just a third income of $2,000-3,000 a month to get started, and then goes to 6, and then to 7, and then to 8. That's what people and I didn't, and both of us have a mutual friend, Vinny Chopra, who's one of my, most beloved mentors. And, you see people like that who own $500 million in real estate, and you think, oh yeah, but Vinny started off with single family homes. And so it's it's just the same principle applied. In fact, you mentioned a minute ago, Beau, start with something small. I would encourage you, don't start with a big syndication. Trip over on the smaller deals, because you're going to trip because you don't know what you're doing. And that's okay. That's one thing that I will say. If somebody said, Mike, how did you grow fast? I was willing to risk tripping even in front of my investors. And that's tough to do because most people, that scares the living daylights out of them. And I'm like, if you're willing to just figure it out on the fly, and I wouldn't do it without somebody in your corner like Beau, or somebody that knows what they're doing and can guide the process a little. I wouldn't do it like completely blind, right. But and I didn't either. But I wouldn't start with a $5 million deal. I'd start with a $500,000 deal, or something that you can have to go raise 100 to 200 grand and get your feet wet. That's what I did. And I didn't do that strategically. Had I known what I know now, I would have wanted to start bigger. But even then, I'm glad I started small, because then I could trip over my own big feet for a little while and figure it out. And then when we just got done doing this 100-unit deal, and we'll continue to scale up, now it was even that deal. If I hadn't had the last year of experience, I wouldn't have been able to bring that thing to the finish line. And so, yeah, you're 100% right, Beau. Start small, and don't a 2-unit or a single family home, and then go to a 4-unit, and then an 8, and then a 20, and then that's the way to grow a real estate portfolio, not jumping into a 200-unit building. Most people don't. I wouldn't do that.
Yeah. The only way I think it really makes sense, if you've got a lot of money and you can ride on a Vinny Chopra or somebody's coattails as a general partner, because you're infusing a lot of capital in the deal.
Absolutely.
But yeah, I think that also too is like, when I've been on some of your coaching calls, and like, I think that's what we're trying to convey. It's like, listen, just take action. Let's just go if you have to go find a duplex or fourplex. What's the gross rental income? What are the expenses? What does it look like? Is there any value add? It's really, if you keep it real simple, those first couple of deals and you get some wins, then you go, okay, well, it's the same thing. I'm just buying it. It's a little bit different to finance large commercial properties, but once you get that, then it becomes a little bit easier. Now, this year going forward, I mean, your shift is, are you just exploring different markets now? You kind of, what's your goal for this year? What's it going to look like?
Yeah, good question. So our goal this year is to do one more triple digit syndication before the year's over. So some sort of 100 to 200, maybe. I mean, we just did a 100 unit building, and I'm not, once you hit that 100 unit spot, to me, going to 150 or a 300 unit building, I don't necessarily need to do that for me personally to reach goals, because I'd rather take, in fact, I just after this deal we just did, this 100 unit, I just put under contract a 16 unit in Kentucky, because I think that's a good market. It's a smaller deal. It's a $1.4 million deal. It's a much smaller deal. But my thing is, I'm not real big on huge deals for the sake of huge deals unless they're good deals. And so for me, my year moving forward is to continue to create passive revenue. I want to at least do one more syndication before the year's over. And then I really like the rhythm personally of about this last year, I did way more than this, but moving forward, our team is going to slide into a rhythm of pretty much 2 deals a year, one on the first 6, one on the second 6 months, and just keep that rhythm going. And then maybe even move into after you raise capital, you can move into some other sectors and looking into maybe even acquiring some businesses. As right now, some businesses are kind of ready to sell after going through COVID and getting the kicked out of them. And so we're even looking at taking some of our capital and changing up the game a little bit. But the truth is, it starts with that capital.
Right. And so, yeah, I'm seeing a lot of investors I know also, and it's opened my eyes to it too, where it's like, okay, like, principles are principles, right? Like you're buying cash flow or potential cash flow.
Exactly.
And so what can you do with, where could you plug in something that's going to run pretty much without you as far as businesses go? And I started to do a lot of SBA financing for people that are buying these owner user type businesses. And it's pretty amazing what you can do, right? Because you can leverage SBA, you can get 90% financing from the
great
SBA.
Financing.
Yeah.
Yes. And so, you can often get the seller to carry that 10%, or even split that. So you're really only coming with 5% of the table to take over a cash flowing business. And sometimes it's not cash flowing. Sometimes it's breaking even or whatever. It might even be lose money. But the truth is, yeah, I mean, you're 100% right, man. Because again, private capital, as you know, Beau, with what you do, private capital opens up so many. If you can raise capital, you can do storage units, you can do anything, you can do fixing and flipping at scale. If that's your game, you can do anything as long as you can find deals and find money. But again, I would say the number one thing that everybody should work on, and I still work on, I know Beau works on a lot, we talk about this a lot, is you've got to work on the real estate that's between your ears. Because you will never purchase a 100 unit building or a 50 unit building until you first purchase the 6 inches of real estate between your ears. I'm telling you, it is the most important and most valuable piece of real estate in your world. And so and that's why I like to start small and go big, is because it allows your mindset to grow with where you're at. And most people just starting off don't have the mindset yet that's prepared to go to a 100 to a 200 unit building. And maybe you do, great. Especially if you've been in other sectors and been successful, you probably could. I think Vinny did. I think Vinny started off at a 100 unit building. But that being said, I think you gotta work on what's between your ears, which is why listening to this is such a good thing to continue to tune in.
Actually, Vinny started with a seller finance deal. It was 180,000, like 14 unit building. So
there you go. See, there you go.
So he didn't. Now he's buying $50 million buildings, right? Like, it's like, hey,
right.
Big
boys.
Yeah. And I know, like, for me personally, I think this is a good interview for me to listen to, because it's like, you're right. The real estate in between your ears is the key to all of this. And like, I have the one of the best Rolodex in here, and I'm not, and I'm like, oh, it makes me, it's frustrated me. And that's what I think is the real clarity for everybody. It's really right here. That's the whole game right here. Everything else that's the one shift in your mind. That's how you look at guys like Finney and go, well, what's the difference between these guys? And it's like, he just keeps going, right? And yeah, he runs into issues like anybody does, but he just is positive. He just like wakes up, does his cardio in the morning, and then he's like, okay, I'm going to go look at hotels. I'm going to I'm going to go find some off-market deals. I'm going to put some LOIs out there when they make sense. Like, he just got one. He's highest and best because he's just proactive. He's proactive. And that's the other thing too, is I think you got to talk to people. You really have to learn how to talk to people. You have to talk to brokers. You have to learn the lingo. Like, if you're calling somebody as a newbie, you're going to sound like crap in the beginning. Let's face it, these brokers aren't going to want to work with you, right? But after a while, you become a good talker, and you just got to practice. And so I had a call with a newer investor, and she was looking at a building, and she reached out to this commercial broker, and he hadn't responded yet, because he didn't respond because she approached him from like a non-commercial. If she would have approached him with the lingo, like, hey, with the positivity, it would have been a reciprocated conversation. So people are aware of that. And of course, in the beginning, you don't know exactly what to say, but that's what the practice comes in. You have to like learn that people are going to say no to you. I mean, you're going to get rejected. I mean, how many people did you get rejected in the beginning? Like, when you were
So it's funny you say that. I got a broker lead in Houston, Texas, and I called him up and was talking about, I'm looking for $1 million deal. And he's like, dude, I don't do $1 million deals. I don't do anything less than, 8 or 9 or $10 million deals. That's just not my game. And it didn't give me the time of day because I wasn't playing at his level. And so, but even the brokers that I did call, and I say this all the time, a lot of times brokers are getting bombarded every day, right? They've got 3 groups of people. They have the MLS group of people, they have their CRM, and then they have their SMS. They have their text list. And every time they get a deal, they first go to their private group of investors that they've worked with before, that they know. And if those don't want it, then it goes to their CRM, people in their database. And if they don't want it, then it goes to the MLS. That's how commercial real estate works. And I didn't know that when I first started off. And I just thought, just call me when you have a deal. That isn't. So what you have to do is continue to call, continue to connect, let them know what kind of property you're looking for. Sooner or later, you'll hit a broker that maybe is a little bit newer, a little bit, fresh, and is hungry and is out there looking for deals, finds a deal, connects you with one. And all of a sudden you get that first deal done, and then everything changes. I'm telling you, you get one deal done and a broker sees you in a completely different universe.
Yeah. And now when you talk to brokers, you sound like you know what you're doing. So it's like, now it's like people are pursuing you. Like, okay, he's got a track record. He's got a schedule of real estate. He knows what he's doing. He can raise capital. It does become easier. I mean, there's no question. Like, when you make your first $1 million, is the first million is the hardest to become a millionaire. And then after that, you watch these people and all of a sudden they're like, just doing leaps and bounds. They're investing in other businesses. They're taking their money. They're making their money starts working for them. And I think people with like the W-2 mentality, like they just got to like wake up and say, okay, look around and look at these people. What are they doing differently? And even I do that to my business because I've been so focused on just originating loans, right? Like, but I'm thinking, okay, well, look at what Mike's doing. Look at what Vinny's doing. Look at like my other friends. Yes, I do transactions to make money, but I need to be investing in these reoccurring revenue deals. Reoccurring revenue is the savior to getting your life back. And that's just the end of the discussion, right? And that's why we all want to do this in whatever is multifamily, or it's buying businesses, self-storage. We want to do this to live the life we want. Like, you just made a big move to Arizona, right? That was your vision, to say, I want to go live in the sun. I want to live in the desert. I want to, not deal with the winter anymore. And you did it. And pretty soon you'll probably be buying your lake house somewhere.
Or on the golf course. I can tell you this. My favorite athlete of all time is Jerry Rice. I'm a big 49ers fan. And Jerry Rice used to say, most people want to get to the end zone without running through the defense. And his whole point is, and this is what real estate investors, they want the result without getting denied by brokers and denied by investors and I'm not somebody selling you a get rich quick program. I'm here to tell you, it's going to take some brokers not getting back to you, going to take you kind of fumbling on the phone, sounding like a goofball, like we all did, and working through the quote unquote defense, because there's going to be some people that knock you off your feet, and you got to get back up and hit it on the next play. And that's just the way that real estate's done. And so I think a lot of people, they want to get to that end result, which is great. Or, you can apply this to anything. You want to lose weight, but, don't want to go to the gym and eat healthy. Well, that's going to be a lot harder. It's the same thing with real estate. I mean, if you don't want to call up investors and have them not call you back and tell you, no, I'm not interested, then raising capital is going to be a lot harder. Now, for me, I'm like, here's the thing. If 1 in 10 people tell me no, or 1 in 10 people tell me yes, then every no is one step closer to a yes. I just got to run through the 9 no's as fast as possible and get to the yes. So as faster as I can run through those no's, the faster I can raise capital. And so it's the same thing with building your real estate business, any business, but building your real estate business is today, like get off Facebook. I mean, if I can love you for a minute, get off Facebook and call a couple brokers in a market or two that's popping and say, hey, what do you have in the X amount of range or whatever? And start, like get started, do something, like if you move that needle every day. And I know this sounds so trite from somebody who you might see, or Beau, you might see, or these guys, you might say, well, yeah, it's easy for you to say, cause you're there. I'm telling you, 12 months ago, nobody knew me as a real estate guy. Maybe 15 months ago, nobody knew me as an investor. No, I had a couple units and nobody knew that I was really a real estate guy. Nobody. So think about it, this time next year, your whole life could be different. But it takes running through some no's. You know what I mean?
Yeah, that's amazing. Just think, guys, apply yourself. And you got to uncover a lot of, you got to look at a lot of deals, right? So like, I know we're going to wrap up here shortly, but give us like one ninja tip on, like, hey, just like I have no deals right now. I'm just getting started. Where do I start uncovering deals? Like, what's the process there? Or maybe you own a couple rental properties, but you're just, onesie twosie. And is it just outreach? And hey, are you just like, do you have a system that's just contacting different people in the markets you want to be in? What does that look like?
Great question. So here's my ninja tip. And this tip, if this is my ninja tip, and the amount of people that apply this, you'll see your life change. So what I did was, so the MLS, right? You go to loopnet.com, or Crexy or 10X or whatever. That's an auction site, but you're going to the MLS. You're saying, okay, what's available, right? And so you're seeing all these properties. It's like fishing. If you see a ton of boats in the same area, it's going to be a lot more competition, right? And so the MLS attracts the most competition. So here's how I use the MLS. I don't go there for properties. I go there and I find properties that are like properties I want to buy, multifamily property, for example. And I see what broker listed that property. I call that broker. So for me, the MLS is a broker search site. It's not a property search site. And so I go there and see who's listing this type of property, because they probably list other properties like that. So I call that broker up, and I don't email and let me know a time. I just pick up the phone, old fashioned. Hey, my name is Mike Fritz. I'm a real estate investor. And my big phrase is, I'm a real estate investor. I'm looking to bring capital to XYZ city. I'm a real estate investor. I'm looking to bring capital to Houston and start investing in Houston. What do you have in the multifamily range? I see your property at XYZ on market. What do you have that might be off market? And here's the cool thing about that. You can call every single broker on the MLS. They're all there, and you're going to find somebody that's got a few minutes to chat and might be willing to give somebody a chance. And you're going to find somebody, but you just got to be willing to prime it. So that's what I would do.
That's good. And then once you get going, you're going to have team members, and eventually your team members are helping you do this.
Oh, right? Of course. Yeah, of course. Yeah. So now I have a person that's doing it and does all the due diligence throughout the project. And they get a little piece of equity of the property for doing that. And absolutely. But when you start, you're the janitor and the sales guy and the CEO. That's just the way it works. Right. And so, I used to think, yeah, but how does this scale? How does the scale? Until my mentor was like, dude, don't worry about scale till you have to. Just start working, start priming. And then then like when you're, as you've done, Beau, that when you're ready for a VA, bring on a VA that can reach out to people. When you're ready for an assistant, bring on assistant. When you're ready for that, great. And we are now. I brought on a full-time, actually kind of 3/4 time assistant last month that now works and does a lot of stuff in the company, all across from both our training platform, training people how to invest in real estate, and our investment side. But don't worry. I mean, you scale to that. Don't worry about scaling until you need to.
Right. Yeah. I have a client right now who's picking up single family properties. And this is just an example. He's paying a VA $4 or $5 an hour.
There you go.
Train that VA to call off market deals in the market he's buying in. And literally, I just did a loan for him. He bought it for $222, the single family house, closed on it with the hard money loan or the bridge loan, whatever you want to call it. He then put it on the MLS the next day, did no work, cleaned the house. That's it. And he sold it for $365, made like 150 grand. He's
awesome.
He's got like 3 of them in contract, and all he's doing is paying a $5 an hour VA to dial for dollars, right? And giving them the script, giving them the process, follow-up system. And so that's the ultimate leverage, right? So like,
absolutely.
Just think like I like what what you said about being the janitor and being the CEO. That's what we have to do in the beginning to get the business launched. Once that revenue starts coming back in, to be able to spend $5 an hour for a 40-hour a week virtual assistant, is pretty good.
Huge.
Right. Like, and then you can get another virtual assistant to do a different thing, another virtual to do it. But by the time you're done, it could be just you, and you could have 4 virtual assistants that are running your complete business for you, like all the stuff. Obviously, you're doing the high dollar stuff, like talking to your potential investors in those relationships, but they could be sending out like your newsletter and doing things like that. So because at the end of the day, you want to figure a way of like, how do I take myself out of the equation and just do like the minimum I can with the highest dollar activities. And that's why VAs are good in the real estate business. But
yeah, totally.
And so why don't we just talk about Power Up Real Estate, what you guys do with your coaching program, how they can find out a little bit more about your coaching program.
Yeah, absolutely. So, so one of the things that our goal is to help people get, it's a 6-month process, and the goal in the 6-month program, it starts with a 10-week intensive, and then support throughout that 6 months to get you a property inside of 6 months. I actually kicked against my team, kind of really encouraged me to stretch it. It used to only be 10 weeks because that's how long it took me to get my first one, was 71 days. And so I said, let's make it 10 weeks so that people kind of take action. They're like, well, let's give them support for 6 months. And I'm like, all right, I just don't want to prolong your action. So I conceded and said, all right, let's do 6 months, but let's keep that 10-week intensive. So yeah, we work with people to help them get a property inside that 6 months so they can have some cash flowing property, everything from finding the deal, finding money, negotiating that deal, and really the due diligence process. Because I'll tell you, my biggest mistakes in real estate have been in the due diligence process, missing things and that I shouldn't have missed and didn't know, and tripping over and that kind of thing. And so you can go to freemultifamilymasterclass.com, free multifamily masterclass. I have a free 60-minute training that talks about the 5 upgrades you need. And then at the end of that, you can actually book a call with our team, and I can chat with you a little bit about what we do and make sure that, and you'll actually talk to me because I vet I vet people pretty heavily to make sure that you're ready for it and that you're not, and we also want to protect our family and make sure people are ready to come in and are great people, which I'm sure your listeners are. And so, so go to freemultifamilymasterclass.com. There's free training there. You can book a call. We'll hop on the phone, chat a little bit about your goals, see where you're headed and how we can help you get there.
Awesome. Thank you. This was an amazing interview. A lot of nuggets here. I know I got a lot of takeaways.
I love it, brother. Thanks for having me, and thank you. And again, I'm not kidding you. Tune in to Beau's show. Continue to listen and follow, because you're going to continue to get value and hopefully get that first deal or your second or third or fourth, so you can start going even faster. So thanks a bunch for having me today, buddy.
Thank you.